Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. And we got a lot to discuss. Jam-packed show with two guests, Marc Chaikin at 8:15, Phil Davis from Philstockworld at 8:35. And in between them, we have earnings. We have Amazon with deciding to release Amazon Prime numbers for the first time ever. We have a very tight range in the S&Ps we want to discuss. We have the chips sector getting, or some TSM at least weighing on the chip sector. And we'll take your questions from our chats, as always, premarket.benzinga.com and youtube.com/BenzingaTV. Joel, I mentioned the tight range in the S&P yesterday. What is happening at least this morning?
Yeah, that 16.75 range, we had that back on March 20th. 14 yesterday, very tight range. Now we're down. We're down 4.5 points. Peaked just below Tuesday's high, which was 13.75. Couldn't get up to Wednesday's high. And on the downside, Yayo wants a number on the downside. Yayo, I'm going to give you a number. That's 2703.75. That's Tuesday's low. That matches the pre-market low, and it looks like it's shaking right now. Under that, it's going to be tough to find support in this market. Bitcoin trading up over 8,000. We're talking about the futures here at 82.20, up $90. Crude continues its assault on $70, up 93 cents. That big breakout yesterday at 67.75 area. Gold in the red by 80 cents at 13.52.70. And silver in the green by almost 2 pennies at 17.26.5. This is not going to. Oh, Fuzzy says we lost audio. Did we lose audio? No, Fuzzy lost audio. Well, this is not going to be as good a show today because we don't have Dennis on video.
No video, but you got me on voice. So I will get you a camera. I will get it tomorrow. Issues here with my camera. So we'll get that fixed up for you tomorrow. I'll be back on video. But today, it's back to radio for me. So you can actually see that you don't have to see my ugly mug here this morning.
All right. Yeah.
You're going to see me in a nice suit.
Oh, yeah, I bet you.
A picture taken 5 years ago.
At least.
I don't even think I had pants on in that picture.
All right. Let's talk about
too much information.
Real quickly, we had a little debate on the pre-market show about crude oil making its assault on $70 here. Two things we talked about. One was how the oil stocks are kind of lagging, and then I kind of said, well, it's good for oil stocks, but it's not that great for the overall economy. Higher costs, production costs for companies that use it, higher gas prices, but you had a different opinion on that.
I mean, this has been, and if you go back to the 19 years I've been trading, you would always say there was really the argument you're giving. There was probably a negative correlation between oil price and the overall economy, and therefore stock market pricing, because it's more expensive, obviously, for your consumer when oil is going up. Gas prices are going to go up, and it's a natural hit on everyone's pocketbook. But I would say that in the last couple of years, there really is no correlation at all. Almost went to positive correlation back in 2016 because oil was getting so far down that everybody was concerned what was going on when we got down to $26. So everybody wanted to see a relief rally, which they eventually got. I mean, it's funny, you looked at this back in 2016 when we were $26 a barrel. Now we're back up here to 70. This is impressive. I mean, we've come back a long, long ways. You had a lot of people saying we'd never get back up to this pricing again, and yet we have. And these oil stocks have been cheap for a long time here, so they're playing catch up right now with the overall market.
And remember, we were worried about the banks. Remember, this was back in 2016.
Well, that was it. You were worried about how much exposure. The Canadian banks, especially, if you look back in 2016, Canadian banks took a very big hit at the beginning of 2016 because there was so much exposure. Obviously, Canadian economy is more exposed to oil than pretty much any other economy out there. So you have a lot of bank loans out there to oil companies. And when oil is going down $26, we were worried about losing a lot of these companies. Now that we've come back to 70, those fears have alleviated, obviously, and banks, Canadian banks have come back with that. So 2016 proved to be a long-term buying opportunity, not only for oil stocks, but also for the Canadian banks.
Yeah, we are getting into some unknown levels here. We took out the October 2015 high yesterday. And I mean, you could go find some daily levels. I'll just alert our traders that we have not been over $70 since July of 2015. And what a bad July that was. Ended June at 78.56. Ended July of 2015 at 65.89. So getting into a vacuum area in the crude oil market, psychological $70 level. Maybe we'll hit that today.
And coinciding with the psychological $70 level, we've got a psychological $80 level here in ExxonMobil.
Nice.
XOM, not only psychological, we got up there back in February. We just kissed up to 79.87. That's not coincidence there. There's big sellers there at the point at $80. I can see over 90,000 shares in the book right now. That is probably going to grow because we're still an hour and a half before the open. But I can tell you there's a big institution dumping at 80. So that is going to be your hurdle for ExxonMobil this morning.
And that would be up 78 cents from the close, and it would be up.
I think I got trouble going through today. You need oil really to continue really spiking for that to take out 80.
Yeah, you need to close at 79, 82, spoos up 12, boom, boom, take it through on the open when you have some size players. But let's talk, before we go to the earnings, boy, Amazon. If you were short Amazon, man, oh man, you're not too happy today.
Wow, this news just came out of the blue there too. It wasn't like they were scheduled to report anything. And all of a sudden, boom, they come out with some prime numbers and the stock is in blast off mode. Spencer, details on these numbers.
Yeah, it was all in the 8K letter to shareholders, which wasn't supposed to. There was no indication it was anything of note was going to be in there besides just a letter. But no, they dropped some nuggets of information in there, most notably that Amazon Prime, the 13-year-old, I guess you can call it delivery conglomerate service thing that they offer 100 million members in Amazon Prime. And that is the first time we've ever gotten any Prime membership numbers. So that was a big that's big. That's big that we finally know something. They have not previously given any indication as to how many people use Prime. I'm a customer. It's $100 a year. I don't really use it, but apparently everyone does.
I get 2 to 3 packages a week from there, so we certainly do use it. I just pre-market action. I mean, they just took this straight up, just kind of hanging out here at 1560 area. Your pre-market high is 1559. Nope. It's 1562.64. Filling a gap. You filled that gap yesterday. I mean, I really can't give you any numbers here. Your March 27th high was 1575.97. I will bet Dennis a lunch we don't see 1575.97.
No, it's up so much here, up 30 points already, and the market is not. The market's kind of faded. Actually, every tech stock was up with Amazon there last night. That is not the case here this morning, so I'm not following suit. That being said, stock's up $30. So it's going to be a good day for Amazon shareholders. I mean, we talked about the stock on the show for the last week, and we kept talking about how it's bumping its head up against that whole 1460 area multiple times, getting up there, and it was just ready to go. And then 2 days ago, it does blast off. We get the 40-point lift. We get another 20 points yesterday. Now another 30 points here today. So here you go. You're 100 points higher almost than where we were 3 days ago. So I'm not chasing it here now. The trade was 3 days ago when it was looking like it was going to break out, which we know obviously talked about, and now it's gone. So now you look and you think, well, there's not that much in here really until 1600, but there's a lot of air below as well because we just rallied 100 points. So SOH trade for me here, sit on hands. I don't think there's anything in here. You know, as a day trader, there's always trades. But as a swing trader here, I think you're in the middle of nowhere.
The one thing I want to add real quick is what we thought was on the news desk was most interesting last night in that letter was that they said that more than half of all the units sold on Amazon were from third-party sellers, meaning Amazon doesn't really have to do anything to get more than half of their business. They just have to maintain the technology of the platform, but they don't have to have inventory or anything, because more than half of what is sold on Amazon doesn't come from Amazon. It comes from, people like me and you, which we thought was interesting.
Now they're building they got a big old warehouse at Hazel Park, and the track that's closing down, and supposedly they may be building more warehouses there. So they're selling a lot of goods all over. Just a quick question. I don't know if you guys have the answer to this. Of all of the 100 million subscribers, how many are US based?
I don't think it's said.
Okay.
No, I don't recall seeing that. But can we move on to
Nope.
to Apple?
Let's go to some earnings stocks.
Well,
There's 3 or 4 of note here. We'll try to get those in. Marc Chaikin's coming up in 4 minutes
Let's
here.
go.
So let's
Let's go.
stock a minute. We're going to do 4. I'm going to take you to American Express here right now. AXP trading up in the pre-markets, up $3. Spencer, details.
$1.86 versus $1.71, 9.7 billion versus 9.41 billion. Fiscal year EPS guidance coming in at the high end of $6.90 to $7.30, which was in line with the estimate.
$100 is size there in the book. That's $1.50 away from here, but that puts a lid on it, in my opinion. I don't know where it traded up to after hours. If you were trading it up, and I don't know, how high did we get after hours?
99.63. And
we always get near it, so we didn't quite get to it. But there's 40,000 up there at 100. It's not huge, but that could grow. So I think, you get in the upper 99s, you got all kinds of resistance.
Yeah, 99.70, your March 12th high coincides with the pre-market high. Really not giving it back yet, though. Just kind of hovering right here at 98.40.
But it is a financial, and some of the financials don't hold the gains, like Morgan Stanley there yesterday. American Express, a little different animal. It's not a bank, but just be careful when you're chasing financials because they are kind of out of favor right now. Jump over to, let's go this morning, Procter & Gamble, who wasn't even due to report this morning. They were supposed to report, I believe, tonight, but they bumped it up for these great numbers, which maybe aren't so great.
Q3 core EPS $1, which is in line with the estimate. Sales 16.3 versus 16.23 billion dollars. They are, however, raising their core EPS outlook for the fiscal year from 5 to 8. Well, they narrowed it. It was 5 to 8% increase. Now it's a 6 to 8% increase for the fiscal year EPS.
This stock needs to hold the lows from March, and we might test them today. 75.80 is where we got down to in March. That's a level that it needs to hold. 3.74% dividend is some value. I personally would love it not to hold. I'd like it to get back down to the $68 price that I had bought it at before, because we know I bought in my investment account at $68 and sold it at $90. I always buy when there's blood in the waters, and then I sold it when everybody loved it at $90. I would love to get it back at $68 again and take another round out of it. I don't know if it's going to get that low, but I'm hoping it can continue to leak. At 75.80 is the level, though. It's got to hold.
And we are trading at 76.54. Dennis talks about the 75.81, which represents the low of the move. But man, you got a couple lows at 6.02, 76.30. So I don't know. We'll see what happens. I'll call a big level, 76. See if we can hold that today. Institutions will have to step up early, though, to save that stock from taking out that low of the move.
Well, I got a minute for the last two. Alcoa, AA, numbers.
Oh, man.
Yesterday after the bell, 77 cents versus 70 cents. Sales 3.09 versus 3.08 billion dollars. So a slight beat on that and a beat on the EPS. Again, raising the fiscal year. Actually, they're raising their EBITDA for the fiscal year. And what else do we have? And no, that's pretty much it.
Man.
What in April this stock has had. Look at this move. I own this in my investment portfolio too, so I'm happy about it. Look at the move. Look at the move in April. $44 on April the 4th. Here we are. We're like 2 weeks later. It's $62 now. Now you're chasing. You're buying this now. You're chasing. I mean, stocks can stay hot for a long period of time, but holy cow, this is a full-on chase now.
Will you please get out so I can sleep better at night?
Still in it.
62.
I've had that stock for like 20 years. I'm holding on.
The old reverse split up the company and then we rally trick, one of the oldest.
Yeah, but they took shares away and all. I don't even know. I'm so confused. I don't even know if I'm up or down in stock. They gave me Arconic, but they took some Alcoa shares away. And I look at my cost basis and it's all messed up. And I don't even know if I'm up or down on this thing anymore. Originally, I bought it at $20. I can tell you I've not tripled my money though, so something went on.
Pre-market high, after hours high, 62.97. And boy, it traded, oh man, nearly 400,000 shares up there. So 62.97, that's my bogey on the upside. I don't even know where to give you support in this thing. So, okay, let's go get our first guest.
Yeah, we'll grab Marc Chaikin. I'll be right back in a moment with him. Welcome back, everyone, to Pre-Market Prep. Spencer Israel, Joel Elconin, and Dennis Dick on now with Marc Chaikin from Chaikin Analytics. Marc, how's your week been going?
It's been going well, Spencer, except for the fact that the financial stocks are a big disappointment. Right
yeah. Any particular opinions on why that is? The numbers aren't bad.
The numbers are good, and the only thing that I see that people are pointing to are the yield curve, which is flattening, and the prospect that interest rate hikes may not be the big boost to the bottom line that everybody was hoping for.
Any particular bank stock? Are you watching all of them, or is there any one that you're seeing has more room to run here or more vulnerable, because they all have different exposures?
Well, you're basically seeing a sell on the news mentality. So Goldman Sachs and Morgan Stanley both reported really blowout quarters, and after some initial enthusiasm, they finished at the lows of the day. JP Morgan, which reported last Friday, initially spiked up, looked like it was going to try and make an attempt at the old high around 120, and that's now trading at the bottom end of its 5-day range. So if you're looking at the major banks and the big brokerage firms, it's just not looking good here.
Marc, so how do you resist the temptation that, okay, these stocks, good earnings, I mean, this is just a pullback to buy. How do you differentiate, whether this is the worm has turned here and this is just a golden buying opportunity, or, maybe it's time to, hit the exit button in these issues?
Well, we're seeing a very negative Chaikin money flow starting at the top down for the SPY, which is normally not a good thing when you've rallied up and gotten overbought as we have, and also in these big bank stocks. So if I saw positive money flow in JP Morgan, remember this indicator has been around for over 35 years. It's seen everything. If I was seeing positive money flow and we're not, I'd be willing to step in here. I just think with the financials as weak as they are, and you've got a little bit of negative chip news here about 20 minutes ago from Taiwan Semiconductor relative to demand or the lack of it from Apple and NVIDIA. I think you've got to take a little bit of a cautious attitude. It's the first time I've said that in quite a time. We've been a buy the dip, W bottom sort of advocate, and there's just something that makes me uneasy here. Sometimes you can't quantify it, but I'm just uneasy with the quality of the rally and the fact that you've got a real sell on the news mentality, not just in financials. This is going on elsewhere in the market.
We're on the line with Marc Chaikin of Chaikin Analytics. Marc, now, I don't know if you can answer this question without, having to shoot me afterwards, but could you give us, a little bit of the 20-factor alpha model, the Chaikin power gauge? I mean, you mentioned it all the time, but I don't know if we've ever dug into the secret sauce at all. And you're making a significant point here. We rallied up. We've had a tighter range. Volume tailed off yesterday. Tell us a little bit about the Chaikin power gauge.
Well, the power gauge looks at growth, value, sentiment, and technical factors. The value factors like free cash flow to market cap and price to sales are what investors like Warren Buffett and Seth Klarman look at. The secret sauce for me is in the expert opinion or sentiment factors. We look at what the short sellers are doing, whether the insiders are buying, industry group relative strength, and then two measures of what analysts are really thinking. One, are they raising or lowering their earnings estimates? And then how are they viewing companies relative to their buy, sell, hold opinions? So when you add it all up, it's eclectic. It's helped us over the last 7 years. It was very bullish on the financials through mid-March. And I'll give you an example. Home building numbers came in beautifully over the last couple of days. And Lennar reported a blowout quarter, had a bullish power gauge rating. They're not responding. D.R. Horton, KB Homes, Pulte, they're just not responding to good news. Consumer is still relatively confident. Job market is strong. Interest rates are not going through the roof, so mortgages are affordable. Why aren't the housing stocks responding to positive news? So this is sort of like the Sherlock Holmes novel, Hound of the Baskerville, I think it was. The dog didn't bark. They knew that someone on the inside committed the crime. So sometimes you got to take away a tell from the market. Yeah. And the tell here is that good stocks are not rallying when I think they should be.
Mark, we're seeing this, like you said, across the board here too. It maybe started with Lennar. Obviously, they were at the tail end of last earnings season, I guess you could call it, if you say the official start of earnings season was the big three banks last Friday. But I mean, there was a blowout quarter, and the stock did respond and went up 10% on those numbers. But it gave it all back in 5 trading sessions. So there was just people, selling into that rally, and obviously continue to sell here into the rally because it really hasn't come back at all. And it was good numbers. And I agree with you on the banks too. A lot of these banks had great numbers. And it was almost like, you looked at Bank America and JP Morgan and Citi rally on their numbers and sell off. And then you're like, okay, well, Goldman's rallying on its numbers. Is it going to sell off though? And yes, it does. And I've been saying 2 days ago, Morgan Stanley reports, I'm like, it seems silly, but I mean, Morgan Stanley's are good numbers, but you know what? I'm not buying it when it's trading up $1 because every other bank has sold off on their numbers. And then yesterday, Morgan Stanley does the same thing, sells off on its numbers there too. And now you look, Procter & Gamble's down, IBM gets slaughtered on its numbers. I mean, the IBM numbers weren't, the growth wasn't there, but the numbers weren't that bad. I mean, it's IBM, it's a cash cow to knock it down 15 points yesterday. It's across the board. Taiwan Semi getting killed here this morning. That's knocking down Apple and Nvidia a little bit in the pre-market. I mean, you're right. The selling is across the board. It's kind of like we've run up into the reports a little bit there. And in some cases, we didn't even run up that much, but they're selling them. And even if the earnings are okay, they seem to be selling them on the reports. Except for Netflix. Except for Netflix. It gets a pass.
Well, good luck there. And you got some great brokerage firms support there. Goldman Sachs raising their price targets ahead of earnings was a big tell. But we saw something yesterday in Lam Research, which has been a favorite stock of ours. They reported numbers that were spot on. They beat estimates, they beat revenues, they reaffirmed their guidance, and the stock was down 5%. Now, I'm clueless as to what triggered that. Clearly, there's a sell on the news mentality, and it's not just individuals or, triggered by strange ETF trading patterns. This is serious money that wants out of stocks. And this is really the first time I've said that in over 2 years. Whether it means that we're going to break the 200-day and destroy the nice W pattern that's already in place remains to be seen. But it's clear from the trading patterns. Well, 8 is group rotation, so that's good. Energy, transportations, healthcare, all very strong. But clearly, in terms of the market leaders, which were the financials and the technology stocks, people want out. They just want to book their profits. Now, maybe there'll be a buying opportunity here. I'm not much into guessing. I like to look what the market's telling me. And it's telling me that money is flowing out of these whenever they can see a bid.
Talk about the energy, because this has been an incredible rally in oil here for the last few days. I mean, yesterday you had a huge pop. Today you get a little bit of follow through. It's up here again this morning. Thoughts just on oil and energy stocks overall?
We've been bullish on the integrated, on the refiners, led by Marathon, Valero, Andavir, which used to be Tesoro, and Phillips. And they continue to act extremely well, making new highs. Now, ExxonMobil has a bullish rating, and Chevron in our work, Apache. So, you know, the more integrated oils are doing well. There's a story on the tape today that the Saudis would like to see the price of crude oil in the $80 to $100 range. That may be good for the energy stocks. It's not good for the economy here in the States because gasoline prices are going to go up. It's just a drag on consumers. So I think you've got to go with the energy stocks. They're very overbought here. So you may, especially the refiners that we mentioned, you may have to just start easing into ExxonMobil and Chevron ahead of the earnings that are coming up. Let's see, I think Chevron reports on Friday. Chevron reports before the opening on Friday, as does ExxonMobil. That'll be the tell. If these two companies give positive guidance, then I think you're going to see a continued move in the energy complex.
Jumping over just to a couple other sectors there. We saw some action in some healthcare and some drug stocks here. Two stocks, I'm not sure if you're following the story, but two stocks have been going in the opposite direction. Merck has been going straight up. They had some positive Keytruda data, and Bristol Myers is a competing drug, and their news wasn't as good. Let's start with Bristol Myers, because this stock's seemingly in free fall here. It's went from $70 at the end of February down to $52 here now. Is there any, is a power gauge looking at this? Is any potential bottom forming anytime soon here in BMY? Because BMY shareholders have been taking out behind the woodshed and beaten lately.
Well, you will see a bottom at some point. It does have a 3% yield. But speaking of the power gauge, it turned bearish on March 20th with the stock trading at 66.43. So that's the beauty of the multi-factor model. And Chaikin money flow has been negative the whole way down, now starting to underperform the market. Probably too late to sell the stock. Trading here at 52, it's trading at a 52-week low. I think you want to wait for a reflex rally, maybe up to the 55, 56 level, but this stock is going to continue to underperform. And you're right, Merck looking really good here, has a bullish power gauge rating. That's really the difference between the fundamentals being aligned positively for a stock or fundamentals negative, as with BMY. Another thing that's helped in this whole healthcare complex was Amazon's comment that they're not going to get into the retail drug business. So that helped ABC. It helped a lot of the names in the group that were under pressure, afraid of the Amazon effect.
Real quick, Mark, you followed Natty Gas at all? That certainly has not been participating with the crude oil rally.
A huge oversupply there, and you're right, not participating, and don't fly in the face of what the market's telling you. This is no place to sort of try and pinpoint a bottom or bottom fish in that complex at all.
Year-end price target for the S&P. I know you're kind of adjust as your indicators go, but any year-end price target for the S&P 500?
It's still 2,800 to 3,000 on the S&P. I think we're probably going to be in the lower end of the range. We're absorbing a lot of incoming missiles here, and the market's holding up reasonably well. I do think we're going to get some sort of sell-off after the April earnings season is over, but I don't think it's going to be dramatic. I still think that full-year earnings up 18%, 9% estimate for next year, an increase in S&P 500 earnings. The market has room to run. It's just got to get through this short-term plaque here.
We've been on the line with Marc Chaikin. He's the founder of Chaikin Analytics, a veteran, a 40-year veteran of Wall Street, joining the show. Thanks a lot. We'll talk to you again soon.
My pleasure. Be good, guys.
All right. S&Ps took out yesterday's low, went all the way down to 0150. Now on the rebound here. And what's leading the charge here is Apple. News me on Apple.
Yeah, Apple getting hit this morning a little bit. What happened was Taiwan Semiconductor Manufacturing came out with some weak guidance on Thursday, today, obviously, and they blamed a weak forecast range for the second quarter. The range they gave was 7.8 to $7.9 billion on their revenue versus an $8.8 billion estimate. The reasons they gave, at least two specifically cited: one, softening demand in the high-end smartphone market; the other, a more conservative cryptocurrency mining forecast. And that is hitting both Apple and Nvidia last I checked.
AMD down 2 here on that. You're seeing really the semis across the board taking on the chin, but obviously with the smartphone comment, that's going to hit Apple too. It is now trading down $3. It's been an impressive run up for Apple here too. We were $165 just 2 weeks ago here. We're starting to get up near that 180 psychological level there yesterday. So not surprising that some people who are sitting on some recent gains would be booking them on this news.
Let's talk about TSM here, taking it on the chin, down 212 at 39.80. Let's see here. You are just coming up on a big time support level. The low of the move, your February low, was 39.96, and we are trading at that level and not really bouncing. So you need to get back over $40 in a hurry in this issue. But the 15-minute chart is certainly not giving you any indication of that. If you want to hold out and you're saying, okay, it's breaking the Feb low, I'm not going to panic yet. 38.52 was your low in December. So I'd use that as another area of support, potentially to cover some shorts. Hard to tell. Since you made the low, the rebound has not got any higher than 40.35. Real quick technical on Apple, traded down 328 on 400,000 shares at least this morning. Trading on the lows of the pre-market session, comes in at 174.50. And look how we rallied up, and then you got those tight ranges. I wish, Dennis, you would have told me about the double top yesterday, just under 179. Let me see if I can find a daily level for you. Folks, keep an eye, two lows to keep an eye on. Your 4-day low, 73.85. Your 5-day low, 73.04.
I'm trying to figure out how we're only down 5 points in the S&P. Because, okay, oil's up here a little bit. Maybe it's helping a bit. But, I mean, just looking across the board here, you've got stocks really getting hit. I mean, I guess there's Alcoa. I guess there's a few outliers where American Express is up. But, Procter & Gamble getting hit hard this morning. Philip Morris getting hit hard. Entire semiconductor sector is just annihilated here this morning. Nvidia's trading down $5. Yep. AMD's trading down 2%. You got Micron trading down almost 2%. You got Applied Materials trading down. We know Taiwan's been killed. You've got Apple trading down $3 here. I guess Amazon. Maybe
that's
holding it up.
Yep. And I was when we were Skyping last night, I was thinking, man, this market looked primed. Pun on words there. With Amazon leading the charge, and I think it was going home long overnight. And boy, I'm glad I didn't do that. SPOOs are now trying to recover that low from yesterday, 03.75. Currently trading 03.50. Let's see here. We got 45 seconds until we bring Phil on. Dennis, any notable imbalances?
Yeah, there's some sells, and that's another reason why we're down here. Bank of America 189,000 to sell. The bank still cannot seem to catch a bid. Visa 56,000 to sell. That kind of stands out this morning. General Motors 61,000 to sell. Going the other way, it was Square with a buy imbalance. SQ 99,000 to buy. Alibaba also 30,000 to buy. So I guess there is some isolated strength here in a few different stocks here this morning, and maybe, so maybe it is mixed to a certain extent. I just see with those semis down that much, and Apple trading down, and Procter & Gamble and Eli Lilly, we didn't even mention, has trading down $2.50 here this morning. I mean, there is some big companies that are getting hit here this morning.
Okay, Spencer, what's on the docket for 8:35?
8:35, Phil Davis from Philstockworld will be on in just a second when we go grab him. So we will be right back with Phil.
to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick, Spencer Israel working the boards, and we are joined by Phil Davis. He is the founder of Philstockworld. Phil, how you doing on this Thursday morning?
Great. How are you?
Good. It's a great day to have you on. You know why?
No, I'm not sure.
Okay. Because we've had a nice rally in the market off the February lows and March lows or whatever. You had a really tight range yesterday, our tightest range in about a month. And now, I mean, it's decision time for the market. So I know you're a long-term player and you look at things from a longer-term perspective here, but you know, what if you're in the short term, you're trying to decide on something, you know, what are you using? What are you using on a day like this?
Well, I'm using the same stuff we always use. I'm using you talk about the short term, but we are long-term investors. We play the shorts out of boredom, frankly. I mean, that's, the main reason we'll sit there and play around the short-term market, because it's very dull. The way we play, it should be dull. We just want to make money. So we set up trades to just make money as long as nothing drastic happens. So 90% of the time, we're bored off our asses. Last time you were on, I told you that we thought the S&P would settle down at 27.28. That's where we targeted it. And where's it at this morning? 7.08. So we're 20 points off from, what was it, February something that we were on your show?
Yep.
So, so over 2 months, we're 20 points off in our prediction. Our prediction is not based on charting. It's based on, we actually look at every single component in the S&P 500 and value it and then total it up and then say that's what it's worth. So here we are into earnings where it's right at where we said it should be. So that means that basically, so for our short-term plays, what we do is we look for if it's on or off track to where we're predicting it. And if it's too far above, we'll short it. And if it's too far below, we go long. It's honestly not a very complicated system.
All right. So what's on the radar now here that, we've had the rally, we've got near your targets. So are you probably licking your chops on some shorts here? And I know there's different ways that you play shorts. So what's on the Phil short radar?
Well, we just shorted oil this morning. It hit 67.50, not 67, sorry, 68.50, which is completely ridiculous. So we shorted that, but we're only looking for like a 50-cent drop, but that's still $500 a contract when you play that in the futures.
How do you stop? I got to ask you about that one, because you're trying to short a rocket ship. How do you know, like, this is the time at, 68.50 and wasn't 67.50? What gives you conviction in the call here? Is just feel like it's getting tired here? Is that what it is? Like, what's making you make that call?
I'm so glad you asked, because tomorrow is the last day of trading the, what the hell month are we in? April. So the May contracts. The May contracts expire tomorrow. And the thing about the NYMEX, and I'll just say, it's a premise, but you guys, it's something we've proven over many years of telling people this. The NYMEX is it's a front. It's a total joke. It has no connection to reality. And the trading there is all bullshit that's just meant to pump up the price of oil. So, because all these orders are fake. All the orders you see on the NYMEX are fake. They're never going to take delivery. They will trade 3 billion contracts over the course of a month, and in the end, they will accept delivery of 10,000. It's everything else is just a joke that's meant to prop up the price of oil. It's computers and traders trading back and forth to jack up the prices. So when you get to the end of the month and there's a heavy amount of open contracts, like this morning, there were 60-something thousand contracts open. Hang on, 62,500 open contracts. By tomorrow, there will be less than 12,000 contracts. So they have to dump 50,000 fake orders that they have no intention of accepting delivery on. By the way, that's 50 million barrels worth of oil that they will be throwing the contracts out between now and tomorrow. And now, so the problem is they're not going to be able to find buyers at this kind of price. So they're going to have to take a loss and roll the contracts into longer months and hope that oil goes up over the summer. And so what we're betting on is the friction of that trade.
All right, real quickly here, risk reward ratios. You shorted it at 68.50. You're looking to make $500, so that would take you down to 68. It's traded 69.25 right now and hit 69.55. So,
oh, I'm sorry, 69.50. My mistake. I'm sorry. The price is so ridiculous, I just get confused. It's 69. It was this morning. It was 69.50 this morning, not 68.50. 68.50 is our target. That's why.
okay. All right.
Sorry about that. It was this morning's price that we shorted, 69.50.
Okay. All right. And let's see here. Let's move on here to some other stocks.
And also, that's true. I have very strong confidence it's not going to go over 70.
Okay. All right. Let's move on. The bank stocks have not been reacting well to earnings. And any thoughts on the bank stocks?
Well, I mean, they were priced. They were priced for really great earnings, and they had great earnings, but they weren't. There was no surprise there. There was no particular thing that any of the banks said that gave you confidence that they would be able to continue to grow at this pace. In fact, if you break it down and you look closely at their financials, all of their gains are from the tax changes. They haven't really done anything to improve their revenue streams. All they've done is paid less taxes. And that's really not, some people say, well, that's an investing premise, isn't it? Because from now on, they'll pay less taxes. But the reality is, people are really buying stocks looking for growth in earnings and revenues. They're not buying a stock, because if that were true, if they were buying a stock just for what it paid out, everybody would be in a REIT, right? But it doesn't work that way. People don't want something that just pays out money. They want something that's going to grow over time. And the banks are just not demonstrating their ability to do that. Also, leverage-wise and size-wise, they're worse now than they were in 2008. I mean, we could easily have another massive collapse in that sector.
Hey, Phil, just a question from our chat here. Angie Baby wants to know about gold miners. Thoughts here maybe on gold itself and then the gold miners, which have actually had a pretty good month.
Yeah, we told you about Barrick last time. That's been up like 10% since then.
Nice.
And we still like them. We still think ABX, Barrick Gold, is very, very underpriced. And honestly, they're my favorite. I really like them just because they're very large. They're very diversified all over the world. You don't have all your eggs in one basket, and they're very good operators. They have the lowest cost of extraction. So lots of factors that I like about them as far as a long-term investment.
What about some other miners there too? I mean, you had Newmont's had a pretty good run. Agnico Eagle Mines, AEM has really run from 38 to 46. Are we chasing these things here now if you're getting in them now, or do you think there's still more meat on the bone here?
No, I think the gold and silver are both going to have a good run. If you want to look at something interesting, take a look at Wheaton Precious Metals, which is WPM. And they're streamers of silver and gold contracts. So in other words, what they'll do is they'll buy a bulk contract from the mine. So they're basically like taking a call from the miner, and they're saying we'll promise to buy X amount of silver for this price, and we'll promise to buy X amount of gold for this price. So they're putting in a 1 million ounce order at a price. Now the mine is going to give them a discount because they're making a huge order. So let's say gold's at $1,350. They'll promise to buy it for $1,250. So they're giving the miner a put on production so that the miner knows that they're going to be able to at least get $1,250. Meanwhile, Wheaton gets a discount, and as long as the price of metal doesn't drop too far, it can even drop a bit and they still make money. As long as it stays up, they make a huge profit on their contracts.
Let's take it over to the big story of the day, which is Amazon. It's up another 30 points here this morning. And this is a stock that has went into rocket ship mode here too. It's up 100 points in 3 days. What are your thoughts? Does rocket ship keep exploding higher, or is this going to get tired eventually?
No, this is where we started. 16 is where we shorted them last time, and we got a nice 250 point drop.
You going to try it again if it gets up there? You're going to replay it from... You're going to try it again if it gets up there to that 1600 area?
Yeah. I mean, it's too tempting not to. It was a huge reward for shorting it last time. It really, because you're getting into the point where you get up to 16, you're at like $800 billion valuation on a company that made $3 billion last year. So you're talking about way over 200 times earnings. And even if you say they're going to double it to $6 billion, which they're not, of course, but even if you say they're going to double earnings to $6 billion, it's still 100 plus times earnings, 150 times earnings. That's insane. It's not, what you're betting on is that at some point, either people get worried about valuations, or at some point Amazon says something that's not positive and everybody goes, oh my God, what the hell are we doing?
I mean, that's happened before, though, and obviously people like even myself have been talking about valuation all the way up. It just seems to continue to defy, the value critics here, because obviously.
Oh, no, I fully agree. I mean, I wouldn't long-term short them, because on the whole, it's actually a really incredible company which has a lot of things going on. But when it gets very stretched, when it goes very far above the 200-day moving average, and by the way, the 200-day moving average for Amazon is at 1,200. So 1,600 is 33% above the 200-day moving average. That's about the point where we like to short it.
What about Netflix? Because this is another one that's went into rocket ship mode here off their earnings report. This is another one that you could follow in the same class.
I have a lot more respect for than Amazon, because Netflix, although we did short them successfully recently because they hit like 330. They hit 330 in March, which I thought was silly, and we shorted that too. So they're back where we short them, but now they've demonstrated some more growth. So I would probably want to wait till 350 to short them again. Netflix, the difference is that they have the ability to raise their prices in a very significant way. Amazon doesn't. So Amazon basically loses money on their retail operation and makes money on their cloud operation, and they're trying to make money on all the other crap they're doing, like music and whatever. Netflix, on the other hand, though, they've got 150 million subscribers, and what they're saying is that at some point they could raise prices $1 and drop another $1 billion, $2 billion to the bottom line. Amazon just simply doesn't have that kind of ability. And you think of your own Netflix account. You have a Netflix account, right?
Yeah.
Yeah. I mean, it's a question.
Everybody has one that they share with everybody else.
Emily does that all the time.
Do you even know what it costs?
Somebody's paying somewhere.
I had two Netflix accounts for a while. I don't know how the hell that happened.
I mean, don't forget, Netflix only is making so far, like last year, they only made $500 million. If they raise their price $1, they'll make $1.5 billion more dollars.
Yeah. There's definitely, if they just cut down on the sharing too, I mean, that's the whole thing is one person's account, there's like 10 people free riding it. So,
I wouldn't know about that.
I don't know about
my mother and my wife and my daughters all have separate accounts.
But anyways, there's just a ton of share. We know that there's a ton of people who are sharing accounts on this.
Well, no, they don't just let you. They basically encourage it. They've got. I have 5 pictures when I log on to Netflix. There's 5 pictures of my family that all have their own account, that are all using something. They've all got their own. Netflix gives them all their own streams.
Why is that? Why don't they just cut that out and make you all pay? Because first of all, do you think all these people would pay if you actually? Didn't allow them, 5 different accounts?
They don't all have to pay. Here's the thing, though. If Netflix goes up $1 and then says we only allow 3 other people, am I going to cut my Netflix account? No, I'm not giving up my Netflix for that, right? So my mom and my wife, I would probably pay for me and my daughters. My wife would have to get her own account, and maybe she'd share with my mom.
Yeah.
So Netflix just has to do the math at some point and say, okay, how many people are we going to lose versus how many people are we going to keep, versus how many people are going to get pissed off, and so on and so forth. But anybody who raises prices goes through that math.
Yeah, I remember the head of HBO saying a few years ago that he also encourages people to share their HBO Go accounts. It's the same thing.
Yeah.
I think they just want people to watch.
They want to get you hooked on it. It's like any heroin dealer knows this. You give it away for free, and then once they get hooked, you raise the prices.
Yes, it's all drug and we're all.
I'm hooked. You watch that Ozark?
People got to binge.
3 days ago on the show, I was talking Ozark. I want to know if Phil Davis watches Ozark, because that's a hell of a show. Put that one on your bucket list. Ozark. Netflix.
Oh, I have not seen that one.
Watch that one with Jason Bateman. Awesome.
See, everybody's got their favorite Netflix shows.
Yes.
It's like, it's a thing. Believe me, it's like a real big thing. It's as big of a thing as HBO was back in the day.
Sure.
So I don't see them dipping off on subscribers, which is why they're to me they're more scary short than Amazon.
Yeah, definitely agree with you there. Phil Davis, founder of Philstockworld, has been on with us. Thank you so much for the time, Phil. Have a good rest of your day.
Thanks. You too. Have a good day. Bye.
All right, Dennis, we got to play some catch up here, and we got Procter, and we talked about Procter and Gamble though, but you noticed that Lilly was trading deep in the red here. Any news on Lilly?
That's drug news with insight.
Yeah, we had an FDA staff review of their rheumatoid arthritis treatment is supportive of the 2 milligram dose, but not the 4 milligram dose.
And this is that they've got a collaboration here with Insight on this as well. If you look, INCY is trading down 4% here in the pre-market as well. So Lilly and INCY taking a little bit of a heat on this one here. Lilly is a stock that I owned in my invest portfolio for years. It got too lofty. I sold it, I believe, around $82. So I actually could buy it about 5 points cheaper than I sold it there now. But I originally bought this at 35. So I don't think I'm ever getting back down to 35. I would love Lilly to get back down to the 60s and maybe put it back in there. But at these prices here, drug stocks still just, a little bit out of favor. I can't bring myself to buy Lilly here at these prices.
And boom, trading at the lows of the pre-market session, 76.96. That was your low, less than 2,000 shares traded there, getting a little bump right near a whole number. So I'll keep an eye on 77. This is a very, very extraordinary move for Lilly. Going back on the daily charts, if you're looking for more downside, you got a double bottom at 76.30 and 76.33. I just want to bullish is back in the Google chat. And remember when we were talking about CLDR? It was all him.
Cloudera.
Yeah, it was all bullish. And it's the only reason we looked at it. 3-day win streak above in that gap area. I mean, yeah, you would always like it to fill the gap and go right back into the 20 handle. Unfortunately, you got a lot of people stuck above 18. So they'll be, if it get back to 18, I would want to get out. Also, you would just have you really have shorter term or intermediate term buyers, probably between what was the low of the move. It put a double bottom in at 1257. Big players that can put, a couple million shares on and say, hey, I'm selling this at 14.5. I could care less if it ever fills the gap. So looking good on a 3-day win streak. You just want to continue.
It's a breakout, but now you're chasing. And the time was, I bought it down there too, is when that executive, that board member bought a huge chunk of stock. And that was right there. You can see the first green candle. When the stock closed, I believe it closed the previous day at around 12. Yeah, I'm just trying to grab the price, 12.76. And then it opened the next day around 13.20 or 13.30. And that was the day. And I actually said it that day. I owned it. I said, I think this thing could see $14. I thought it would take a couple of days. It saw $14 the next day, or I think it actually even saw it that day. I wish I would have held on to it, but scalper blood and me, I was out. It was an overnight day trade for me. I should have stuck it in the long-term investment portfolio too. Maybe I would have held on to it, but that's a tell. It needed a vote of confidence, and it got that vote of confidence and it's been straight up since. Now you're chasing though, because it was $13 when that board member bought. Now it's 15, so it's 2 points higher. You're already talking, you're paying up $2. You're paying up, significantly from where that board member bought. So yes, it's all gap. Yes, it can continue to run here. There is room to the upside. I would say even potentially room to 16, but you're chasing it a bit here now. So risk reward is not nearly as nice as it was 3 or 4 days ago.
And also, I kind of talked about when Cloudera or when Bullish originally mentioned it, I kind of talked about sellers' exhaustion. Not so much that there are aggressive new buyers out there. It's just that everyone who was out wanted out. A lot of people sold on the 4th, 28 million. And then the day that it actually bottomed, it traded only 3 million. And that was like the lowest volume it had had since the news had broke on it. And now you're getting kind of thin too. The last 3 sessions, 2 million, 2.7 million, and 2.2 million. So we'll keep an eye on that. The chat is buzzing here. Walmart caught an upgrade to buy. Dennis, are you buying Walmart? Are you buying it?
No. Simple reason is I still don't think it's cheap enough. And you can say, what are you talking about? This thing was $108. It's 87 here now. I liked it down in the 50s and 60s. I never quite got there. So obviously, sometimes I miss a lot of boats because I am cheap and, I'm a value guy. But still, when you look at it, retail is still not in great shape. I mean, yeah, Walmart is maybe in better shape than most of your other retailers out there. The stores are still pretty busy. Yes, you get a nice 2.36% dividend. I wouldn't say it's expensive here. I wouldn't say it's cheap. I think you got, if you are buying it, where your support is $85. If you're buying this from a long-term perspective, below 85, especially from a swing trade perspective, below 85, I wouldn't want any part of it. But it is trading up. It did catch an upgrade. There is overhead resistance at 90, though. So I think we're range bound between 85 and 90 until proven otherwise. As the swing trade starts to get above 90, then it gets interesting.
Tech One thinks COLL is getting interesting here.
Smaller stock, and I don't follow a story.
Yeah, I just say, man, it hit 26 yesterday, settled at 24.89. Keep an eye on that $26 level because you had a high at 26.02. That was on March 29th. If you're looking to buy this on a pullback, 2-day low 23.41. We got to talk about this HMNY, this Helios and Matheson, very active day trading stock. Spencer, give me the news on that. It's not good news for shareholders.
They had an offering this morning, 10.5 million shares or Series A2 units for gross proceeds of around $30 million. It'll be about $275 per unit.
This story is just over. I mean, this was the stock, the darling there that had the huge run up on this movie pass stuff from September. In September 22nd, let's put this in perspective, week of September 22nd, it was $3. And then in literally 2 weeks, it went to $38. I mean, this just got silly. And we were saying, it obviously got citroned up there. Andrew left, which really, he was saying it was worth 20 or less. And we came down to 20, I think, the next day. And it's just been straight down ever since. So Citron, the bubble buster, completely burst this bubble. It's just continued to leak every time it's rallied. The rallies have been met with more sellers there. I know you had a recent rally there. So like you said in the chat, you can trade this thing. But, as a longer term perspective, it's just tough to invest. Now, you look at here and you can say, okay, well, yeah, this 250 level, held for a long period of time in 2017, 210, 220, 230. So, maybe you get a bounce to the 230 level when you get down to there because it bounced there before. Yeah, is, worth shorting now? No, hell no. I wouldn't be shorting a stock down at $2.50. But I don't think it's ever coming back to $38. I don't think it's ever going back to $10. I think the story is over. So does it continue to leak from here? Potentially. I think every time you get a bounce, those things sells off. So it's just not a good story.
And my thesis on it is like everyone's buying movie passes, but they're not making any good movies. I mean, you can have passes.
Everybody watches their Netflix.
Yeah,
Joel.
Everyone watches on Netflix.
Ozark.
Okay. Real quick, Legan in the chart. Let's see if we got a nice level here. You had a high at 185. You went down to 155, 30-point move. That's easy. 170. You got a double top at the 172 area. I look for it to bust through 172 in the heartbeat very quickly. I expect it to reverse and maybe head back towards the 165 area. Disney caught an upgrade, I believe. Is that correct? At somewhere? Disney, DIS? You want to cover that real quick?
Yeah, I did not see Disney, no.
No? Was that yesterday? No, I didn't. Maybe I was looking at yesterday's notes.
We got Sprint catching an upgrade. We
nothing on Disney, but let's talk House of Mouse here because this stock has been in quiet consolidation between 100 and 102. When do they report? Are they coming up?
Let's look in the pro real fast. Disney due to report on the 23rd, I believe. I'm sorry, I misread that. The 8th, May 8th.
Oh, so it's a while. It's a couple weeks yet for Disney earnings here. I mean, I am so torn on Disney. They got problems with the media part of it, but then, obviously the parks are still busy as hell. This is, they always figure out how to make money. And it has been in, if you just put this and look at, perspective here from a monthly, we have been basically going nowhere for 3 years on Disney. And this is how sometimes these stocks go. They have a run up and then they consolidate the move for a few years. And then eventually they start to move up here again. I wonder if Disney isn't going to follow that script and eventually start to go up here again sometime. And it's kind of attractive at $100. I mean, on a multiple perspective, it's not expensive I'll just grab the PE really fast here, but I believe my software's working a little bit slow. It's trading like 15 times forward earnings. I mean, it's cheaper than the market. So unless you think media and other media stocks, they're valuing it like a media stock. Some of those are trading 10 or 12 times, so it's a little bit expensive. But they got so many other businesses too. It's still best of breed. I mean, Disney at 15 times.
They're also about to make a disgusting amount of money with Avengers and Infinity War, which I think comes out next weekend.
There is going to be like so many biggest revenue potential.
It's going to be like the biggest movie of the year. They're going to make it disgusting.
I look at this. How can you go wrong, really? And you know, in the short term, it can always go wrong. But if you stuck this in your investment portfolio, $100 right now, and looked at it in 20 years, you think it's higher than 100? I do.
20-year
I think it's a lot higher than.
You want to do a 20-year bet on this one? No.
20-year bet. What are we going to do on that one, Joe?
I don't
20-year bet.
I don't know.
We got to hope we're both alive still.
Just pay it by you'll pay it by thinking. Like just think you're gonna pay it, and then it'll show.
Forget about it.
No, it'll show up in his account.
Here's a stat for you from Spinner. The Netflix market cap is almost as much as Disney. That's an incredible stat. I mean, that just sounds mind-boggling to me that a brand as powerful as Disney, and we at one time, you know, it was even rumored that Disney might buy Netflix. I guess that's not going to happen now. The market cap's approaching it. I mean, incredible stat here. You got a company that's done nothing for 3 or 4 years, and obviously Netflix has been straight up in that time period. But you just compare those two companies, Disney and Netflix, and you say, okay, these two companies are worth the same. Who's going to be, you know, the better value here in 20 years? I don't know. I mean, they're completely different animals, but I just think the Disney brand is so powerful. Okay. What if somebody comes up with something better than Netflix? Disney's proven itself for 70 years. And they continue to, you know, reinvent themselves and buy other business and stuff. I'm just making a case that I think Disney is a great long-term investment at $100.
Okay, I'm not going to disagree with you. The S&P's just slipped under 2,700 to 2698.75. So, man, nice break here. Apple leading the charge on the downside. I see Google in the red. I'm hoping for a rebound here. I'm not buying it, but I don't think I want to short it in the hole here. Hopefully we'll get back maybe mid-range on the session, 2706 for a lower risk short. All right, Spencer, let's wrap up Thursday show and preview the final show of the week.
Yeah,
tomorrow's April 20th.
Yeah, not quite a themed show. We're going to talk about, you know, the news of the morning and all that, but all of our guests will have one thing in common, and they will all be experts in the cannabis space. Tomorrow, of course, being 420. The official, unofficial, whatever you want to call it, a holiday for cannabis. We're going to be joined by Alan Brockstein. We're going to be joined by one of our staff writers, Javier Haas, who actually just took some time off to write a book about the cannabis investing space. We're going to talk to him about that. And hopefully we'll be joined by a third guest as well. So that'll be on tomorrow's show, a 420 guest-themed show for that. So we'll get your cannabis questions ready, because that'll be the theme of all of our guest interviews on tomorrow's show. But as far as watching today's show, again, if you missed it, any part of it, you just want to rewatch it again, you can catch the podcast on iTunes, SoundCloud, and Stitcher, or on YouTube. Just go search for PreMarket Prep on any of those sites. Joel, you want to say something?
Yeah, Spencer, you better not come in with red eyes tomorrow.
If I do, it'll be because I'm tired. How about that?
Okay.
All right. I'm already, you know what? I feel like I'm going to be tired tomorrow morning. I have a hunch I'm going to be tired. I don't know why, but I just think I might be tired. Anyway, that's our show today, folks. Hope you all have had a good morning. We'll see you folks tomorrow. Have a good one.